So today we're talking about Peter Lynch. Is one of my favorite investors. He's very witty, and he was with Fidelity with the Megellan Fund between 1977 and 1990. So I like to watch his old videos because he has a great sense of humor and sarcasm. So anyway, so his annual return was 29.2%, and also. A lot of the market condition that he had to work through, we have today. High interest rates, recession fears, downturn of the market, loss in assets. So one of my favorite investors from the past is Peter Lynch. Peter Lynch managed the Megellan Fund at Fidelity between 1977 and 1990. He achieved an annual return of 29.2%. He wrote several books, including one up on Wall Street. There is still some good old footage around. However, he doesn't give any interviews anymore. Many of the market conditions we have now, he had to deal with in the past. High inflation, the economy was down, raise in interest rates, suffering of assets. So while macros are important, but as investor, you cannot predict or control it. And why waste time having anxiety about it? The media's job is to accumulate views to advertisers so they can invest into their channel. This is how the media makes money. More views, more income. As an investor, you need to learn to ignore the noise. As an investor, you simply look at opportunities. In 2007, the interest rates were even higher than we have right now. Imagine not to buy Amazon, Google at that time of fear, and so many other really amazing companies. According to Peter Lynch, we need to focus on earnings, profitability, future revenue, growth of a company instead of media noise. So how to invest on a market downturn?
We had a huge run. I mean, the market was 4,000 just 2.5 years ago. Yeah. And it ran up to 8,300 in August. And like any big rally, sometimes it backs off. I mean, it's healthy. In fact, I'd rather gone down 1,000 points than gone to 12,000. If you look at Japan, Japan went from 5,000 to 15,000 on their Dow. And it was fairly priced at 15,000 on earnings and everything else. Then it went to 40,000. And that caused 7 years of inflated real estate, people overspending, and basically they've been in a recession for 5 or 6 years because their market went up too high. The market goes too high, you're discounting earnings 7, 8, 10 years.
So of course nobody knows what's happening in the next 2 years. Every single person predicting the future is simply speculating. We know over the next 10, 20, and 30 years, the market will go up. Staying focused on long term, select companies you understand, companies that have competitive advantage, that have a great management team, that are trading at a steep discount. After a long and intense bull market, the downturn can look really scary. This is when high-end investors buy companies. Even Warren Buffett has spent billions lately in the market buying companies. Future investments need to have great future growth and trade to a discount. If the intrinsic value, for instance, of a stock says $50, we need to buy it for $25. And while most investments will go up over the long term, the best time to invest is when assets are on sale. This crazy downtrend is giving investors amazing opportunities. This is when millionaires are being built. Many incredible companies are on sale.
The company behind every stock. If a company does well, the stock does well. It's not that complicated. People get too carried away. And first of all, they try and predict the stock market. That is a total waste of time. No one can predict the stock market. They try to predict the interest rates. If anybody would predict interest rates right 3 times in a row, they'd be a billionaire. Considering there's not that many billionaires on the planet, there can't be that many people who can predict interest rates because there'd be lots of billionaires. And no one can predict the economy. I had a lot of people in this room around in 1981 and 82, when we had a 20% prime rate, with double-digit inflation, double-digit unemployment. I don't remember anybody telling me in 1981 about it. I didn't read, I studied all this stuff. I don't remember anybody telling me we're going to have the worst recession since the Depression. What I'm trying to tell you, it would be very useful to know what the stock market is going to do. It would be terrific to know that the Dow Jones average a year from now would be X, that we're going to have a full-scale recession, our interest rate's going to be 12%. That's useful stuff. You never know it, though. You just don't get to learn it. So I've always said, if you spend 14 minutes a year on economics, you've wasted 12 minutes. And I really believe that.
That's a classic.
So what do you think about Peter Lynch? Isn't he a crazy person? I love him. And I hope you like this video. It was a little bit different. Usually we do Tesla, we do a lot of other things, but I wanted to talk about Peter Lynch. So I hope you like this video. Please like and subscribe, and I will see you in the next video. Thank you so much. Goodbye.